The market rockets higher Friday, only to start selling on Sunday. Did the bulls just get trapped? This is Invest with Jacob. Okay, guys, so in last week's video, our primary path was looking for one more low before a sharp reversal back toward the 43.50 to 43.80 area, and they almost followed through exactly. They couldn't quite give us the low as the bears failed to follow through, but then they pushed sharply higher up toward that 43.60 area and have started to sell on Sunday. So now the question is, are the bulls trapped? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. Highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so each video is done at the close of the market, and with the exception of this one, which is done on Sunday night, and doesn't air until the next morning. A lot can happen between when I record the video and when the video airs, and that doesn't mean that the information is not valid. It just means that we could be in the alternate path. What I said in the video has changed, or we are following the path that we thought we were going to follow. All week last week, in every video, I told you we were looking for a sharp reversal. I was expecting a bottom soon for a lot of reasons that are taught in our Elliott Wave for Beginners course, and we saw that sharp reversal, and we were all over it. As you can see on the screen, not only did we have the day trade on Friday, we had a swing trade from Tuesday, both of which finished and closed at the highs on Friday, and we got out of them then. The reason for that is we didn't get our exact path, and we got to a dangerous area where we expect a reversal back to the downside in both counts. So with that, you have to understand that what we trade isn't necessarily what I'm talking about in the video, because sometimes there's nothing to trade because it's too sloppy, and sometimes the trades change based on what the market does overnight. So take that into account when you watch these videos. It's why the real-time market updates are so valuable. All right, let's jump into the chart and take a look. Okay, guys, so here we are on the daily futures chart for the S&P 500, and on most Mondays, I do like to do a bigger picture overview so you can understand exactly where we are in the counts. There's no need to do them every day. The bigger picture doesn't change. It still really hasn't changed, but just to give you an update of where we're at so that you can understand what's coming next and what we're looking for as key levels. So we've been talking about this ad nauseum back since last October, 1 year ago. Remember, 1 year ago, guys, as we were careening straight down here, I said we should be stopping in the 3,500 area or so, looking to bottom and reversing back over 4,300 plus. That's exactly what happened. We bottomed. In an ABC fashion, we were looking for this type of move back to over 4,300 plus, and admittedly, they did push a little higher than we thought they would push here, but if you watched my videos and stayed with me the entire time up, I said that at no point does it matter how high they go here, they will come back and test the pivot, which is right here. Okay, so here we are testing the pivot, and that is what I said we would do once this move up started. They got a squeeze in here and they pushed it higher. That happens. Sometimes you don't get the exact targets, and that's why you don't try to counter trade wave 3s and wave Cs until they conclude. And then we got the pullback to the pivot as expected and are right back where we kind of broke out from. So they're back testing the breakout area now, and they are doing it in an ABC fashion so far. So the primary count, and I can tell you that the primary count is kind of on thin ice at the moment, but the primary count would still be, and this has changed a little bit because last October I said we should be coming up and looking for a C wave down, and we could very well still be seeing that C wave down to the 3,000 or below area. It is still very much on the table. We just have to see the pivot break for the bulls, so just keep that in mind. But since the move up was so strong and we did not get a full 5 down here, okay, that means that what we're still looking at as the primary is wave 1 up, wave 2 down, 1 of 3, 2 of 3, 3 of 3. Then you have A, B, C back to the pivot for 4 of 3, which is exactly what you would expect. That's Elliott Wave Theory to a T. Now we're testing the pivot. If the pivot holds and we start to move higher, we would expect a push up toward this 47.50 to 48.60 area for this wave 5 of wave 3. And then at that point, we do this exercise again where we should pull back and hold support in the 45.40 area or so and get one more high up here toward 50.70 towards, or 54.30 in those two areas, just kind of depending on how high they decide to push. So assuming they hold the pivot and they push up high enough to invalidate the C wave down, that would be the primary count. Again, we are right where we should be for this wave 4. They tried to bounce so far. They need to hold support, and we'll get into that when we drill down into a 1 hour chart. But for right now, everything is acting the way it's supposed to. And we would look for the bulls to hold and push up back through this high up toward the 4,800 area, then down in wave 4, and then up after that. Okay, so that's the primary count. Again, it's on thin ice. We are at where they need to hold. The structure isn't really clean and like you'd want to see, which is why you saw in the intro, I said I wanted to be out of all of my long trades by the close of day on Friday because we were hitting a key resistance point. We should see a pullback. And if we see that pullback, I don't want to be in the market yet. I'll get back in once that pullback holds support. Then we can go long. If it breaks support, we'll go short. But in any case, we were at a point where we needed to be out and flat in the market. So the secondary count or the alternate count is what happens if it doesn't do that, right? You have to know both sides of the coin. You can't just bank on it going up because if you're wrong, how long do you stay in this trade? Do you stay in it all the way down here? Do you know when to get out? You have to know your key levels, and this is why we know what the alternate paths are. Yes, the market can go up and go down, and yes, I tell you that. And the reason is, if it breaks X level, Y will happen. If you can understand that and understand that these levels matter and that it's important to know when something fails, just as important to know when it's successful, then you will be a much better trader overall. So anyway, on the alternate path, we would count this as an A wave up, a B wave flat, a C wave up, okay? And right now, we have kind of 1 of 2 counts here, but a 1, 2, and they've just finished 3 of 3. As you drill down, you would see how that worked out, but they would have just finished 3 of 3, bouncing in 4 of 3 back to test the bear pivot, which again we'll look at when we drill down. And then we look for a move down toward the 4,000 area overall. That would tell us that the bull case is pretty much dead, and we are looking at that bigger C wave that I talked about down toward the 3,000 area down here. So the alternate path would be that they fail to rally here and move up. They break the pivot to the downside, and we look for that bigger C wave down. So those are the 2 counts we've been tracking. We've been tracking them for a long time. Since last year when we were on the way down, I gave you over a year out, and it's been pretty accurate so far. So we know where our key levels are. We know what has to hold. Let's drill down and look at where that is. All right, so here we are on the 1 hour futures chart, drilled in off of this high back here at 43.71. I said we were looking at a potential diagonal down here, 1, 2, 3, 4, and then a 5th wave down is what we were looking for. And they tried to get down. The bears brought it down as hard as they could here. They failed, and then they started to rally after that. Just like on the NASDAQ, this can be a couple of things. This can be a truncated 5th wave, and we've started the next move higher, which is what we'd be looking for. Or this can be an ABC pattern, as I have it labeled, and then we'd be looking for the next move down. So here's how all of that goes. Off of this low, if it is a truncated 5th, this move up would be wave 1, and we'd look for the bulls to hold the pullback above 42.70, but ultimately all they got to do is hold this low. They can come all the way down to within a penny of it, and that's holding for wave 2, but we'd really like to see them hold the 764 or above. Typically you hit the 618, so 42.87 would be the typical target we'd be looking for. But move up is wave 1, move down would be 2, then we'd look for a 1, 2, because this is 1 of 3 and 2 of 3, and then we'd look for a wave 3 breakout to the upside. If we get the wave 3 breakout and they push back over 44.22, which is the bear pivot, okay, that's going to make it awfully unlikely that the bulls or that the bears are going to follow through in that C wave to the downside. So if the bulls are able to hold and they give us a structure that comes back up and breaks through 44.22, which happens to be this kind of neckline for that head and shoulders pattern right in that same area, they come back up, they break through that, and it will be off to the races for the bulls back toward 4,800 in wave 5 of 3. And then we look for a wave 4 pullback and then a wave 5 up toward 5,000 to 5,500. So that would be the bull case. That would be what we would be expecting in the primary count. But again, that count is on thin ice. And the reason is truncated 5ths are very rare. Yes, this can be a truncated 5th. Yes, this can be a wave 1. Yes, we can get the bullish count. But again, truncated 5ths are not that common. They're not something that you want to get overly aggressive on until you see something that tells you to be aggressive, like a break of the bear pivot over 44.22. That would give you a good indication that we are likely going to make that bigger push toward the 4,800 area. But if it is not a truncated fifth and it's more of an A, B, C up, then we'd look for a 5-wave move down here to get us started for a wave 1 of a bigger wave 5, okay? And that would be a 5 of 3. So just like we talked about on the big picture, this move down right here would have ended wave 3 of wave 3. And that's very common. We have it actually labeled right here for now. But this 1236 to 1382 area, very common wave 3 of 3 target. Then we would look for them to backtest the 764 and the pivot, which they did. It was 43.80. They came up to 43.60 or so. And given that they pushed through the 1236, that's a pretty perfect hit for a target to the upside. And then you'd look for follow through the downside, and really a breakdown from here, and a break of 41.70 SPX really is the nail in the coffin. But a breakdown from here and taking out this low is an extremely bad sign for the bulls and a very strong sign for the bears. So this area here, I've been saying it for 2 weeks or so. We are in a battle zone. We are on the precipice of what's going to push the market around for the next 2 to 10 years. And the bulls are trying like heck to defend it, and the bears are trying like heck to break it. So again, back below the low that we made last week on Tuesday on the futures is a very bad sign for the bulls. Above last week's high, Friday's high, is a very strong sign for the bulls, but they want to push it over 44.22 ultimately to kind of negate the bear move down. So that's what we're looking at on the ES. Those are the two paths we're looking at. And we have key levels to watch. 41.70 on the SPX, a little bit different, and 44.22 on the futures. So remember, they're two different numbers. 41.70 is on the SPX chart. 44.22 is on the futures chart. Over on the NASDAQ, another reason to be bullish is the NASDAQ. So this move down that we're looking at off of the high, if it's an ABC, they still haven't even hit the 1.0, which is pretty weak for the bears. So you're going to make this move down, you should hit the 1.0. That's how bigger moves are made, is they push down through on this wave 3 to the 1.0 and usually the 1236, okay? So they push down to the 1236. They haven't been able to do that. They have held and held and held above the 1.0 and really right around the 764. They haven't even really gotten that deep. So that is not typically a super bearish sign. So right now you're still looking at a potential 1, 2, and the NASDAQ still has some work to do to the downside to get to that 1.0, but we would need to see them break 14,128 to the downside for the bulls to be invalidated and make it very unlikely that we're going to be heading back up toward the 16, 17, 18,000 region over the next year or so. They would need to break 14,128 for that to be the case. So the bears want to hold here, push up, and kind of complete this move down for a wave 3 of 3, come back up and test the 14,630 zone, and then break it down in a big way. And that would be a more bearish structure that would start to point us much lower on the NASDAQ. But if the bulls can hold above that 14,128, they can still make a low here and build to the upside, or they can make a direct move from where they're at, and we'll drill down and look at how that direct move and breakdown would look. But overall, still the bullish count where we'd look for 5 of 3 up into the 16,500, 17,000 region, pull back to the 15 or so region where they're kind of setting all this support up, and then a move higher up toward the 18,000, 19,000 region on the NASDAQ for all-time highs. Again, guys, until we get a clear hold here and break to the upside, we are in a battle zone. We are in a place where the bulls and bears are trying to decide the market. So it's still not a place I want to be in too long term until I see a little bit more confirmation. Let's drill down a little bit to the 1 hour. Okay, so on the 1 hour chart on the NASDAQ, you actually have a pretty decent leading diagonal up, and then you have a retrace back to the origination point of the diagonal, which is pretty common. And then you have a 1, 2 of 3, and then a 3 of 3 breakout. Now you would like to see them hit the 1, 2, 3, 6, which they were unable to do. So they did hit the 1.0, and that's the minimum target for a 3 of 3 breakout. They've hit that. They need to hold 14,951 if this is going to continue in an impulsive manner to the upside. They're getting pretty close to that right now. So they need to hold 14,951, which is the bottom of the pivot to the upside. If they can hold that and push back up toward this area here, it's 15,424 area, starts to look very bullish and good for the bulls and not as good for the bears. We'd still want to see them do one more pullback and one more high to give us 5 waves. But overall, we're looking for them to hold the pivot at 14,951 and then push higher back up into this 15,312 to 15,424 area for all of wave 3, then a 4 and 5 up into the 15,500, 15,600 area. So that would be the bullish path, or the most immediate bullish path, I should say. There's still plenty of room on the NASDAQ to see this kind of move here. They have not gotten anywhere near the 1.0. In fact, the 1.0 is down here at 14,411. But again, if they come down and hit this number, then the SPX is going to fail, and I think that if the SPX fails, the NASDAQ will fail with it. The bearish count, they want to come down and break 14,128 and hit this 1,236. And right now you're getting just this consolidation through the pivot, which is not super uncommon for a wave 3 of 3 to come down, kind of poke or get through the pivot and consolidate like this. They really kind of held where they needed to at this 1.0. And then they can push down into this 14,000 region in a pretty big sell-off that would give us all of 3 of 3 to the downside. And then we look for 4 and 5 of 3 down to the 13.5 area. And overall, we'd look for the wave 1 of C to the downside to complete around the 13,000 area. 12,959 would be the number. But that's the kind of move we would be looking at, is that the bears have consolidated here around the pivot, not super uncommon. The pivot here, the 14,965, 14,753 area, and they consolidate here. They're still well within consolidation area, and they can break it down from there. We would like to see them hit minimum 14,411, but more accurately, if you're going to see the downside play out, 14,068. So that's kind of what we're looking at on the NASDAQ in a drilled down perspective. They either need to break out to the upside and complete this 1-2-1-2 setup, or they need to come back, break the lows, and drive down to the 14,068 area. Guys, if you love the information that I put out in these videos, but you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it, become part of the trading team, and make sure it's for you before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. This course is helping real traders make real money and finally understand the market in a way that makes sense. If you're getting whipsawed around over the last week and not sure why the market keeps moving like it's moving, Elliott Wave can give you the answers you're looking for. It gives you the key levels, gives you the understanding of market sentiment and emotion, and the targets you need to know so that you can succeed as a trader. It's 25 videos where I go over 3 different sections: the introduction, where we talk about the theory itself and its expectations, your mindset, the KISS method, and why it works. It's your chart setup and tools, where I go through every tool you need on your chart and how to use them with Elliott Wave to confirm your targets and everything you see, as well as the Elliott Wave for Beginners sections, where I go through each wave, how they work, what their targets are, what their failure points are, and how to measure them, how to use them, as well as the theory of alternation, corrective zigzags, the pivot, corrective depth theory, everything you need in your toolbox to understand the market in a way that makes sense. The really cool part is it comes with both of the monthly rooms. So if you don't want to buy the course outright, you can become a monthly member and you get the course for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading, as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Key takeaways for today: Ultimately, the ball is in the Bulls' court if they can hold 42.70, and mostly just this low, but we'd like to see them hold 42.70 and push back over last week's high. That's an extremely bullish sign, and they'd really need to push back over the pivot at 44.22 to give us a strong indication that the Bulls are in control and the bear move is over. For the Bears, they want to hold where they are and break last week's low, and ultimately 41.70 SPX is the number they need to get through to make the Bulls' dreams dashed. Over on the NASDAQ, they are still consolidating around the pivot. If they can push down through here and get to the 14.068 level, 14.411 is a minimum, 14.068 would be the better target. They can do that. That dashes the Bulls' hopes on the NASDAQ and pushes us down into that C wave count. That would take us down to the 9,000 to 10,000 levels. If they cannot do that, the Bulls can take this back over the top, push back up in 5 waves toward the 15.5, 15.6 area, and that would make it very hard for the Bears to follow through to the downside and make it much more likely the Bulls are in control and we're headed back to all-time highs. Guys, that is your market update for today. I will talk to you tomorrow.